I want to talk about why you as a trader should trade what you see on your charts and not what you think might happen. There's a big difference between the two, so let's get into it. Hey traders, Andrew Mitchem here from the FX Trading Coach with video and podcast number 311. And I want to talk about something that's very topical right now, especially when you think about the British pound. And I want to talk about the importance of why, to be a good trader and a successful trader, you should really trade what you see on your charts and not what you think should or might happen to a currency pair. I'll give you a great example. So here we are today, 1st of March 2019. Now, I live in New Zealand, but on the other side of the world, far away from me, we're having that Brexit issue still dragging on. It just seems like it's been going on for months and months and months, and all I read on the news is Theresa May might be doing this, Corbyn might be doing that. Are they going to leave, yes or no? Brexit, is it going to carry on with the vote that everybody wanted to leave or the majority wanted to leave? Are they going to change things? What's happening with Ireland? Europe's getting involved. And to me, as an observer, it just seems a complete and utter mess. And nobody seems to know what's happening. You kind of get that with, I suppose, a lot of politics around the world. But it seems a particularly big mess and dragging on and on and on. So you think about that logically. What could or should that be doing to the British pound? Well, to me, I'm thinking, well, uncertainty, nobody knows what's happening. Are they going to leave? They've got to pay big exit fees to leave Europe. The pound should be absolutely crashing. All these big businesses and industries and banks and, they're all saying we're going to leave Britain if they leave the euro or the eurozone. And everybody should really be thinking the pound has to fall. It has to fall. It has to crash. Yet you go and look at your charts for this year, for the first 2 completed months of this year. And all we've seen is the pound against the US dollar has risen about 950 pips. Against the Australian dollar, it's risen about 1,100 pips. Against the yen, it's risen about 1,500 pips. And almost a straight line. It's just gone, straight up when everything that you think should say it should be going straight down. It should be doing the opposite. So we talked about this on my webinar last night with my clients, and it's all about the importance of trading what you see on the charts. Because if you think about this, fundamentally or almost logically, you'd be just taking sell positions or thinking you should be looking for sell positions all the time on the pound. Yet this year, I've been so many weeks of this year so far, I've said to my clients, on a weekly bias, I'm looking for buy trades on the pound US or pound yen, pound Aussie, pound Kiwi, and because that's what we're seeing. And then you take that down to a slightly smaller time frame and you look at each day, and many, many times we've been saying buy trades on the British pound pairs because that's what we're seeing. And that's the important thing here. Look at what the charts are doing. It doesn't matter what you think or what someone else thinks or what CNN thinks or what some fundamental trader thinks. It does not matter. The only thing that matters is what's happening on the charts right now and making sure that you're on the right side of that. And, that's the real important thing. I think a lot of people miss that point. Trading comes back to the KISS approach, the keep it simple, stupid. It's looking at what's happening on the charts, having a good strategy, and trading what you see, not what you think. So I hope that helps. This is Andrew Mitchem at the FX Trading Coach. I'll see you this time next week. Bye for now.